Hello everyone. So I just actually came back from work. I had some dinner. I told myself, hey, before I read my earnings reports, because it's April 21st and we're in full swing earnings season. So I'm going to read a whole bunch of reports. Right after I'm going to do two videos. So whenever some of my followers or my elite traders ask me a whole bunch of questions, I will more than likely put a video on it, answer in comments, answer in posts. But I like to do video maybe because it's probably easier for me to go through a lot of things. So I'm going to go through two different topics. Is Nathan from Queens, Ultimate Trader on Reddit. You can find me in Ultimate Traders on Reddit. I'll look us up. So the first thing is, like things were going pretty bad the last 2 days before today. The Nasdaq was down almost 200 each of those days. Now, when I say the market, I really mean the Nasdaq, because for the most part, most of us are trading high growth names and tech names, and we don't really trade anything on the Dow. Not one of the 30. And S&P 500, I think we traded maybe one play on the S&P 500. So we mainly, like the last 2 or 3 weeks, well, ever since April 1st, all we've been doing really is trading high tech and growth stocks. So I was saying, while things were hitting the fan, we got to play super defensive, not defensive like banks, pharmacy, supermarket. I'm saying when things are hitting the fan like they were the last 2 days. Luckily today was pretty good, and I am surprised that things were pretty bad, because earnings so far that have come out have been very good. So I am surprised. But I was telling a lot of my traders in the elite group that if things go really bad, we're going to focus on maybe 5 to 10 of my dividend plays, because I have about 50 dividend plays, 50 that pay between 7 and 10%. Now the reason, and be it that I don't have that many followers yet on YouTube, like 105 or so, maybe 2,000 on Reddit. So I don't want the secret to go out to everyone, because if everyone knows the secret, we are not going to benefit. Why? The dividend stocks might go up. This is an auction. So as you know, because I have other posts, other videos that explain that it's an auction. So if everyone knows what happens with our dividend yield, instead of getting 7 to 10%, we're going to be getting 5%. Yeah, so we'll still get it and we'll still trade it, but we won't get as much if everyone knows. So unfortunately, I'm not trying to offend anyone here, but majority of traders are not smart cookies. So when I say smart cookies, it's a very, very small percentile. I would say even under 1% of traders know to get super defensive. The smart money managers know already, and they rotate out. Because what happens is, when your tech company or your growth company has no money in the bank, zero in the bank, or very little in the bank, and through their business, they don't make any money. When the stock drops, the only way to save it is for another buyer or another money manager or a whole bunch of retail investors, retail traders, bidding it up. But if they don't bid it up, it keeps dropping. It's going to keep dropping until some money manager or some entity comes with a ton of money to bid it up. Or they have to come with cash. The company has to come with cash. But if the company has no cash, your stock could be 300. Then it could be 200. Then it could be 100. Why can't it go lower? No one says it can't go lower. The only way the price does not go lower, this is an auction. This is an auction. The only way for a price not to go lower is if the company comes in to buy with cash. They do a special dividend like LDI. LDI is not super defensive yet. They make money, is defensive. Mortgage plays are defensive. They're not super defensive. Super defensive to me and this is just me that came out with it. Super defensive to me is companies that give a dividend of 10%. So as I go back into this, LDI is on fire. April 21st, LDI two hours ago, by the way, they were downgraded early on today. So was HMPT, home plate. So was UWMC. So was Rocket. How do you downgrade companies that have tons of cash with P ratios between 5 and 10? Okay, I don't know who these analysts are. You know, I don't know what agenda you had. But look, see what LDI did after the market closed? Special dividend, 62 cents. So we're going back to super defensive. So the reason why you go to super defensive is because your tech stock doesn't have any money. So when the stock drops, no one's going to come in to save it. No bigger company with tons of cash like Apple or Google are going to go in and buy it until it gets dirt cheap. And a lot of times they don't even want the company. So if the company has no cash, no buyer comes in, and retail doesn't bid to keep it up, your $300 stock could be 50, could be 20. It's going to drop until someone sees the value in it. Now, when you go to dividend stocks, what do? They pay you cash. So what does all the big money, smart money do when they're trading this tech stuff? They hop into either the value or dividend. Now, value is different, but for me, super defensive is dividend. So I don't want everyone to be a smart cookie. I want the ultimate traders to be smart cookies. So we're going to take advantage of that. We're going to trade the stocks that are giving dividend yields near 10%. And we're going to keep trading them. Now, if you want to wait for the dividend, you can. But the money is made by the trades. Now, I did have one or two followers that said, hey, why don't we just start trading those dividend plays? And why don't we keep making money on that? Listen, did you see TIGR this week? Did you see TIGR go to 16 to 20? No, 16 to almost 21 and back down to 16 and change? That's a 25% ride in a couple of days. All right? That's awesome volatility for traders. You want to pick the dividend stock? Like, I don't want to mention them all because some people don't know, but let's go with PSEC because I mention PSEC on Reddit all the time. So let's go with PSEC. So this week, low 780. This week, high $8.02, 22 cents. So do you want to go with PSEC? It's a Wednesday. On Monday, buying it for $7.80 and selling it maybe between now and then at $8 for 20 cents? No, I don't either. I go super defensive when the market tells me to go super defensive. Okay. Now you can make more money if you want to take a risk and you want to try to buy the dips and time it. But like I said before in my posts, in some videos, that does not work because it could dip, and you'll never know when the bottom is. So it's a lot better to buy the dividend stocks and hop back into tech when the coast is clear. When is the coast clear? Like after maybe a week or 2 weeks of a sell-off, because momentum usually goes consecutively. You can get like 3 or 4 days in 1 week is bad. And then one day up, the next, like I wait till the coast is clear. And I don't mind paying more for the stock. I just want the coast clear. Otherwise, I jump into the dividend stocks. And the reason I don't stay in the dividend stock is just like I told you. Like, I don't want to trade the dividend stocks, but if I'm forced to pivot and trade the dividend stocks, I will. Why don't we want to trade the dividend stocks? Because you're going to get 1% in a week. Now, is that okay? I guess it's okay. But if we do TIGR, look what happened with TIGR. Look what happened with CLOV, CLOV. All right, we can't keep trading stocks that were 8 to 10 all the time. Like when things hit the fan, we're going to have to jump into the dividend stocks. All right, so this is for you. This is why we get super defensive in dividend and why we don't just trade dividend stocks. Because if we keep trading the dividend stocks, we'll make some money, but we're not gonna get a whole ton, and it's not gonna be quick. Instead of 4 or 5 trades of the same stock in one day, it might be 1 in 1 day. All right, have a great night. Another video coming.